Welcome to Seeking Alpha's Wall Street Lunch, our afternoon update on today's market action, news, and analysis. Good afternoon. Today is Tuesday, November 5th, and I'm your host, Kim Kahn. Our top story so far.
Strange women lying in ponds distributing salt is no basis for a system of government.
As voters head to the polls across the U.S., on Wall Street, stocks are higher and bonds are lower, for now. All the major averages are up more than 0.5%, led by the NASDAQ, up about 1%. All S&P sectors are in the green, led by industrials. Still, the indexes are already off their highs of the day, and choppy trading is expected. In the bond market, the 10-year Treasury yield is back up around 4.35%. Fundstrat's Tom Lee says, "I'm bullish in the sense that election uncertainty has caused people to de-risk and cash to sit on the sidelines, but the fundamentals have been good. Earnings season has been very good," Lee added. "The Fed is dovish, and I don't think it's going to matter who ends up in the White House, even if it's a split Congress or a sweep. I think markets do pretty well either way. It sets up for a really good rally into year-end, but when it starts in November is just what we don't know." James Demmert, Chief Investment Officer at Main Street Research, has a similar message, saying investors should look past the election and focus on fundamentals of what drives markets. "Our message to investors is to buy the chop and weakness that is being driven by election uncertainty and to remain fully invested as the market melts up in a Santa Claus rally, which we believe will last through year-end, pushing the S&P 500 to 6150, he said. On the economic front, the October ISM Services Index increased to 56 in October versus 53.5 consensus and 54.9 in September. That's the fourth straight month of increases and the highest reading since July 2022. It's also the eighth time the composite index has been in expansion territory this year, with last month's move driven by boosts of more than 4 percentage points for both the employment and supplier deliveries indexes. Pantheon macroeconomist Samuel Toombs says the survey's most informative metric is the price-paid index, which has been a good guide to market-based core services PCE inflation ex-housing over the last 2 decades. It fell to 58.1 in October from an 8-month high of 59.4 in September, and remains consistent with core services inflation returning to 2% early next year. Among active stocks, Yum! Brands reported a 2% decline in consolidated same-store sales in Q3 to miss the consensus expectation for a decline of just 0.2%. Worldwide system sales grew 1%, excluding foreign currency, with KFC at 1%, Taco Bell 5% higher. Pizza Hut sales were down 1% for the quarter. Same-store sales growth was positive for Taco Bell, but fell for Pizza Hut, down 4%, and KFC, also down 4%. Unit growth was up 5% for the quarter, with all divisions seeing new restaurants added during the quarter. Palantir is rallying after third-quarter results and outlook that beat estimates. Wedbush analyst Dan Ives maintained his outperform rating and raised the price target to $57 from $45 after an eye-popping quarter. He said that move reflects the firm's increased confidence in the game-changing artificial intelligence platform strategy, with use cases for AI taking hold over the next 12 to 18 months. And Archer Daniels Midland was expected to release its Q3 earnings report today. Instead, it issued a surprise preliminary report late Monday, saying it expected adjusted earnings of $530 million, or $109 a share, below the consensus of $125. ADM said it will amend financial statements for 2023 Form 10-K and Form 10-Qs for Q1 and Q2 this year after finding additional accounting problems with restated filings to include corrections for newly identified errors related to intersegment sales. In other news of note, Dollar Tree is being sized up by analysts after the retailer announced that Rick Dreiling has stepped down from his position as chairman and CEO due to health issues. Mike Creedon was appointed interim CEO while the board conducts a search process to identify a permanent chief executive, which will include both internal and external candidates. Along with the C-suite update, Dollar Tree also reiterated its fiscal Q3 outlook and said same-store net sales tracked well through the quarter. Morgan Stanley analyst Simeon Gutman said that irrespective of the CEO transition, pursuing a strategic review of the Family Dollar banner and the rollout of multi-price within the Dollar Tree banner are appropriate measures to generate shareholder value. But Bank of America reiterated its underperform rating on the stock due to continued risks associated with the multi-price rollout, expense headwinds, competitive pressures as Walmart increases its convenience offerings, and potential tariff headwinds. And in the Wall Street Research Corner, on a down-to-the-wire election day, let's talk about the middle. Wells Fargo said mid-cap growth stocks are oversold and have significant scope to outperform, even with the group up double digits year to date. Strategist Chris Harvey says their earning stability, risk, liquidity, and balance sheets look more attractive than small caps. The group's price-to-earnings valuation is about 90% of the S&P. Among the picks are Spotify, Royal Caribbean, Lennar, Church & Dwight, Devon Energy, Block, United Therapeutics, Acuity Brands, HubSpot, PPG Industries, Digital Realty, and PPL. See all the names in our story. That link will be in show notes as usual. That's all for today's Wall Street Lunch. Look for links for stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB and join the elite community of real investors to unearth great investing ideas. Just head to seekingalpha.com/subscriptions.